Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Easterly Government Properties Inc. quarterly report. Easterly Government Properties, Inc. provides a range of businesses and services including acquisition of Class A commercial properties, development of commercial properties, management of commercial properties, leasing properties to the U.S. government directly or through the GSA. These services cater specifically to mission-critical U.S. government agencies, leveraging Easterly's experienced management team and specialized insight into government agency needs. The significant decline of Easterly Government Properties, Inc. stock price. Easterly Government Properties, Inc. EGP, has experienced a substantial drop in its stock price over the past year, with a one-year total shareholder return of -28% as of late October 2025. Several key events have contributed to this decline. A major factor was the announcement of a 32% reduction in quarterly dividend and a 1-for-2.5 reverse stock split in April 2025. This move, intended to strengthen the balance sheet, was perceived negatively by some investors and led to a stock price drop. Additionally, disappointing 2026 financial guidance, released in October 2025, further contributed to the decline. The projected core funds from operations, FFO, per share for 2026 fell slightly below analyst expectations, leading to short-term selling pressure. Challenges in revenue growth and concerns over the company's financial health have also weighed on the stock price. Over a 3-year period, Easterly Government Properties faced a -3.6% growth rate in revenue, with an Altman Z-score of 0.51 indicating potential distress. These combined factors have resulted in a significant decline of over 30.86% in EGP's stock price over the past year. The primary drivers of revenue growth or decline revenue growth for a company can be attributed to several key factors. The main drivers of revenue growth include rental income, leasing properties to U.S. government agencies, acquisition and development of Class A commercial properties, new operating properties, and distributions from unconsolidated real estate ventures. On the other hand, revenue decline is primarily driven by impairment losses and provisions for credit losses. Impairment losses can result in significant financial setbacks, as seen in the $2.545 million loss reported. Provisions for credit losses also contribute to revenue decline, particularly when there are changes in market conditions or paydown of real estate loan receivables. These factors highlight the importance of careful management and strategic decision-making in maintaining a stable revenue stream. Net income and profit margins decline. A cause for concern. The financial performance of a company has taken a significant hit, with net income experiencing a substantial decline. In Q3 2025, net income decreased by 75.7% compared to the same period in 2024, while year-to-date, YTD, 2025 saw a decrease of 40.6%. The 9-month period ending September 30, 2025, also witnessed a significant drop from $14,849,000 to $8,784,000. Profit margins have also taken a hit, with net income margin plummeting from 6.86% in Q3 2024 to 1.44% in Q3 2025. The YTD 2025 net income margin decreased from 6.59% to 3.52%. The likely decrease in operating profit margin is attributed to the decline in net income and increase in expenses. The sharp decline in net income and profit margins raises concerns about the company's financial health. It is essential for stakeholders to understand the underlying reasons behind this decline, which may include increased competition, rising costs, or inefficient operations. Addressing these issues will be crucial to reversing the trend and restoring profitability. The company's financial performance indicates a strong ability to generate cash from its core operations. With operating cash flows of $138,082 in 2024 and $217,263 in 2025, it is clear that the business is producing sufficient funds to cover its expenses and invest in growth initiatives. This positive trend suggests a stable and profitable financial foundation for the company. The company's debt level and interest expenses. A mixed picture. An examination of the company's financial summary reveals a mixed picture regarding its debt level and interest expenses. While there is inconsistency in the reported total debt levels, with some sources indicating an increase from $1,000,000 $1,835,954 to $1,996,606, and others stating no change at $1,638,827. One thing is clear. The company's interest expenses have increased significantly. Specifically, total interest expenses rose by $11,164,000 from 2024 to 2025, with net interest expense also increasing by $11.1 million in some reports. This suggests that despite any fluctuations in debt levels, the company's financial obligations are growing, placing a greater burden on its bottom line. The financial performance of various segments and regions has shown mixed results. On a positive note, the Department of Veteran Affairs, VA, Federal Bureau of Investigation, FBI, and U.S. Joint Staff Command, JSC, have all seen revenue increases over the past 3 and 9 months. The VA saw a $718,000 increase in 3 months and $179,000 in 9 months, while the FBI experienced a $522,000 increase in 3 months and $1,231,000 in 9 months. Similarly, the JSC reported a $99,000 increase in 3 months and $217,000 in 9 months. However, some segments have struggled with declining revenue. The Customs and Border Protection, CBP, saw a decrease of $117,000 in 3 months and $1,762,000 in 9 months. Additionally, U.S. Citizenship and Immigration Services, USCIS, experienced significant revenue decline, while the state of California reported zero revenue for both the 3-month and 9-month periods ended September 30, 2025. The company's financial summary reveals that it has a history of paying dividends to its shareholders. Evidence of these payments can be found on various pages of the document, including cumulative dividend amounts, declared per-share dividends, and specific payment dates. However, there is no indication of share buybacks in the provided information, suggesting that the company has focused on distributing profits through dividend payments rather than repurchasing shares. That concludes the financial summary for Easterly Government Properties Inc. Feel free to comment below, and I will be happy to answer them when possible.